thank you all for coming in this morning. It is claimed that financial services firms can advance ESG goals in many ways while also providing invaluable services to consumers and businesses. Whether it is big banks or the smaller fintechs, big banks restructuring themselves in order to adopt net zero pledges, or fintechs developing new solutions, indeed, to address climate-related issues. In the last couple of years, VCs have been getting putting quite a bit of money into ESG-related fintechs. According to a MasterCard report, 2.5 times the amount of money that was put into those ESG fintechs was put in 2020 versus 2019. And that trend of increased investment looks like is going to increase as these ESG funds mature. It is also claimed that ESG-focused fintechs have a unique ability to achieve rapid growth, deliver ESG-focused innovation, and to attract investment to support their efforts to improve the environment and the society, all while at the same time generating substantial returns. The session title here almost suggests or implies that ESG is yet to arrive to financial services. This is a question that we're going to ask today. How relevant are really ESG issues to the financial services sectors? I'd like us to debate and discuss this over the next 40 minutes. I have an esteemed panel here. I think the MC kindly introduced everybody, and I will just go straight into my topic here. Shargiil, I'd like to start with you, please. Over the last few years, some of the largest and most influential banks globally have indeed committed to reducing their emissions attributable to their operations. Obviously, they have also pledged to reshape their lending and investment portfolios to produce a net zero carbon footprint by 2050. Big plans, big pledges, but they don't come easy. And so what are the challenges faced by big banks? You're with FAB, obviously. So what are those challenges that you're facing in implementing ESG?
I think there are multiple challenges, first of all. Some of the key challenges we face is always, where is the baseline? What is the starting point? So we need to support our clients, first of all, our multiple stakeholders. And the reason that we are now seeing much more focus and attention to ESG over the past couple of years is also because all your relevant stakeholders have enhanced their focus on sustainability as well. If you look at it from a client perspective, the research shows that clients are willing to pay higher price for sustainable and ESG products. We see the regulators enhancing their focus on sustainability, ESG implementations within organizations. We see employees. So when we try to attract the best talents in the market, the question they ask is, what are your focus on ESG? How does it fit with your culture?
Okay.
And if you then go to your investors, they would like to invest in companies who has ESG in the forefront. So all your key stakeholders have moved your focus towards sustainability. So previously, if you look 5 years back, typically the organization will start working on sustainability for compliance reasons. For there were some governance frameworks or there were indirect regulation on sustainability and ESG. But now it's being driven because of the opportunity in order to serve your clients, in order to attract the best talents. That is the movement we are seeing now, and that movement is gonna continue.
So there is no regulation. It is basically you're self-starting. You're being quite. You're initiating those efforts. Let me ask Bryan on the other side. There are no definitive taxonomies of ESG factors. What about the Basel standards for capital? Are there any requirements within there, or will we see any requirements within there anytime soon?
For ESG, I think you're you're going to see probably not so specific of capital requirements, but you're going to see ESG captured in how banks capture their own risks. And the Basel Committee on Bank Supervision, I was a member of this group for 10 years, has worked through this in a slow manner and a holistic manner, I think, for the financial industry overall. Governance, the G of ESG, has been part of the Basel Committee's mandate and part of the Basel Committee's requirements since 1974, probably since the very start of the Basel Committee. And without the G, really the E and the S don't work. So that's really the foundation of how ESG moves forward. The Basel Committee has not focused as much on the S component because the S component has a large amount of national discretion still involved in the overall capture of fairness. Although the one issue within S on data privacy and data protection is grabbing attention worldwide, just not through the Basel Committee itself. Where the Basel Committee has focused its attention in the past few years is on the E component. No. And really, when you get into a discussion of ESG, probably 90% of the time, people are talking about the E.
That's true.
That they want to get into climate change. And there the Basel Committee has issued a paper just as recently as last summer, 1 year ago, talking about how to effectively manage the climate change physical and transformational risks that the industry is facing globally. And we see the physical change, the physical risks manifest themselves every day in terms of hurricanes, tornadoes, storms, weather conditions around the world. So physical risk of climate change is happening to us right now all the time. And that has to be part of every institution, not just banks, but every institution's risk management processes. Where it gets more difficult is in the transformational risk of how do you finance a change toward more sustainability, and how do you finance change toward better climate protection. And that's really where the Basel Committee, I think, is focusing its attention on the overall governance of climate change, not only from the management aspects of a bank, but also in how regulators around the world are approaching climate change as part of their risk calculus.
So the Basel Committee is data-based, obviously. Do we have enough data? Sunil, do we have the data necessary to be able to assess ESG risk within financial services?
See, data quality will be an extremely important aspect of to the success of ESG because the disclosure data and the reporting data, both. If we see an asset manager will not be able to manage his funds, especially those funds which are linked to ESG, it will be difficult for him to sort of manage those. That's one. Second, the data standardization. There is a lot to be done on the data standardization because any investor who has to invest, ESG will be one of the important parameters, and unless there is a data standardization, he will not be able to sort of choose what is the best investment option he has. And third and important thing is the integration of data, because ESG has mammoth data and it is coming from environment and sustainable and governance and all. So how do we integrate that data? Because the integration of data is going to be important. It is going to be challenging. There are statistics which say that more than 2/3 time is going to be spent on data integration to make sure that data which is coming is sort of accumulated together. That is one aspect. And second aspect is how do we refine that data? Because data needs to be in a format which is friendly to the asset managers, or which is friendly to the organizations, or even the regulators. So creating the data sets, making sure that data is refined, creation of a data lake, and then using that data by putting AI on the top of it, maybe machine learning algorithms or even natural language processing algorithms, you can sort of extract the relevance from that data.
Right.
So the data quality becomes the most important aspect to the success of ESG going forward.
Probably the enormity and the different areas that all this data is coming from makes it very difficult to integrate into.
Absolutely.
And then to create one picture or one lens through which you can see and find solutions and apply solutions.
Absolutely. So there are some technology options. Maybe we can discuss.
We can get into those in a minute. I'd like to get Chris in on this conversation and just ask you, Chris, there has been significant amounts of innovation by fintechs to add value and also to deliver growth by aligning financial transactions with ESG goals. What are some of the examples of ESG fintechs that demonstrate the level of innovation that we are at now?
Yeah, thanks, Cyba, and thanks for the great insight so far. First of all, I want to say and emphasize that ESG is a big priority for the DIFC. It actually has been from day one. We have our own corporate governance institute, Haukama, which is one of the first in the region. So governance was the foundation. And then obviously social and environmental parts are as important and have been growing. I think the focus on the E has been getting bigger in the last couple of years, but also for good reasons. But I think on ESG overall, the way I break it down is actually in two ways. The first one, it's quite complex. That makes it challenging because you have ESG, and then within that you have, if you want to go more down the sustainable development goals, you have 17 different sustainable development goals with global targets, with regional targets, with local targets. And just getting your head around all of this is quite challenging, but I think it's important to do. And then the second part is actually the three layers. So I think, and this is what the DIFC is focusing on a lot. The first layer is capacity building, so letting people understand what ESG is all about. Understanding how to look at it, what are the components, what is the impact materiality, how do you as a business actually focus on only a few of those topics that matter most so they can make a difference. The second part is how do you integrate and adopt ESG in your operations, and we're going to talk a bit about innovation because that's where a lot of innovation is required. And then the third part is related to what Bryan and also Sunil was saying. How do you report against it? And how do you get transparency and reliable data and so on? The way at DIFC, the way we do it is actually we have two vehicles that drive ESG specifically in terms of those three dimensions. The first is our Dubai Sustainable Finance Working Group. And this is where we do a lot of awareness, capacity building. We're issuing different reports, white papers, maturity models. We have an ESG self-assessment maturity model. Anybody can download for free and get started to understand how do I look at ESG in a structured way for my company and start understanding to score where I am today and where I have to be. And the other part is the DIFC efforts, where we have initiatives like our partnership with the Global Ethical Finance Initiative on the path to COP28. We have a Future Sustainability Forum later this year, and we have trainings at the Academy as well and other efforts. Now, one thing we've done in terms of ESG innovation, just to come back to your question, is as part of the working group, which is a private public sector working group with most of the international and regional financial institutions, as well as professional service providers and other government entities, including many that are FAB and others, ENBD and so on. We issued a white paper on the state of ESG innovation globally and in the region to understand actually where are the areas where there's a lot of funding and startups that drive innovation, and where do we see gaps that need to be unlocked further. So that report can be downloaded on our website as well. What we found was, one, there has been so far around $140 billion invested into ESG-related startups, venture-backed startups. It's around 3,300 that we looked at. That was towards the end of last year, so probably there's a bit more today. In the region, it's been only, or in the UAE specific, it's been only around 100 that we identified, and around 800 million of funding. So I think there's a big opportunity to invest more into that space here, and also to unlock, with the opportunity of COP and the Year of Sustainability, unlock more innovation in this region. What's interesting, obviously, because it's very broad, the largest funded startup in the UAE related to ESG is Pure Harvest. So it's food security. It's something that you probably would have not thought about, and where you don't see necessary fintechs at the moment. But there's a lot of opportunity, and we see more startups globally and also in the UAE to look at a lot of the effort of measuring and reporting and collecting data on how you're doing against ESG, and specifically climate in terms of carbon accounting and so on. So I think the first step that we see now in the region to shape up is that more companies starting to understand ESG, starting to put a strategy in place and targets. And now in order to achieve the targets, I will expect more innovation and adoption of those innovative startups that will actually enable those businesses to deliver their promises.
Shargiil, I'm wondering if the challenges and the solutions within fintechs, the smaller companies, also apply in the big banks in the industry. Do you share these challenges and solutions? And do you work together? Can you, and how do you work together to better implement ESG standards?
I think we do collaborate. And I think if you need to address the challenges from ESG, partnership and collaboration, stakeholder management is one of the key aspects that's going to bring you closer to the green transition and addressing the challenges you face. I think fintech and climate tech companies have this enormous benefit of starting from scratch, being innovative, not being hindered by legacy setups, data challenges, and etc. So those are some unique opportunities that they come with. And for us to address the challenges where we need to be by 2030, where we need to be by 2050 in order to achieve net zero, the technologies we have today, the solutions we have today are not gonna get us there. That's why that what we are seeing coming through from climate tech companies, fintech companies, are gonna be crucial in order to support not only financial institutions, but multiple different kind of industries in order to address the challenges we all face. So we do work very closely with a lot of different startup companies from climate tech, fintech, on how we can utilize our scale and their innovations to create some collaborations and work together in order to address these challenges we face.
Bryan, are the risks, ESG risk, is it different for size of the institution?
You know, there are some risks relative to size, and you know, probably not a lot of people have great sympathy for the largest banks in the world. But when you think about any institution who's operating in a cross-border framework right now, that every country is approaching ESG slightly differently. Every country probably has a data taxonomy that goes along with ESG. And if you have an office in 100 countries, you probably have 100 different approaches to ESG, which you have to pay attention to from the local regulatory environment. So that is a risk, I think. But the macro risks really are around ESG, I think apply to large and small institutions. As we've already heard here, that youth today pay attention to ESG when they're considering an employer. So every employer needs to have a message that goes to those youth and needs to deliver on that message. You can't just offer a culture in a brochure and not deliver it when people join your organization, or they will leave. And that is fairly obvious. And also from an investor's standpoint, that investors are paying attention, much closer attention now to ESG principles when they're investing. And of course that brings its own risks, you know, because as we've heard, people pay higher fees to go into an ESG investment. And when higher fees are involved, that means people have an incentive to manipulate And so you're seeing really a lot of effort around combating the issue of greenwashing around the world. And I think that's something that is continuing to gain in importance, is how you push back and how you verify that someone's actually delivering what they said that they were delivering in the ESG frameworks. But the bottom line, really, I think, to move forward on all of our fronts, from what all of the panelists have said, is the data issue.
Yep.
And that is your biggest risk component, to making sure that you're capturing the right data so that you can use that data, and that data is accurate.
Which brings me back to Sunil and back to...
Yes.
Back to Sunil, we'd heard from Bryan that there is no taxonomy to ESG factors. Let us talk a little bit about reporting. 20 years on, since 2004, when the United Nations, started coining the term and aligning that to the SDGs, sorry, we still do not have a standard set yet to measure or to play by, a playbook to play by. What data is relevant then and what is not, and how do you determine?
See, as I said, there is a need of doing the data refinements. There are technologies which are there, set data standards, improve integration capabilities. Now, there are efforts which have been made in this direction. Like, for example, FCA, which is Financial Conduct Authority, they already use ESG data. They've created sandboxes, which is nothing but, I should say, digital platforms, testing digital platforms to test ESG data. And it is a combination of the big data, AI, and that testing is going on, that has been going on. That is one. And second is, now today, there are platforms available where the data integrations are possible. You have the edge cloud synergies, which are there, different deployment models on the cloud, which are there. Yeah. Then creation of data lakes, refining the data. You can create data marts, use different data points, even helping regulators to create the governance framework by using the AI, MLOps, and AI algorithms.
But let me ask you, is the solution feeding the problem? Because your sector, if you will allow me, is not exactly innocent. With all that data processing and all that data gathering, you're generating a lot of heat and you're generating a lot of presumably damage to the part the problem that you're trying to solve.
Correct. Let me come to the second part, which is the products. Now today, the measurement of data centers is by the PUE, power usage effectiveness. So the benchmark there is to achieve 1.13 PUE, which is to make sure that the power savings and the carbon decarbonization is happening. Then the products which are there, they are autonomous, power efficient products. And we have been making those products for very long, whether it is on the network side or the infrastructure side. So you have the products that you use to, which are the building blocks to these technologies, and then you have the technologies itself. It's a balance of both, in fact, that we have tried to maintain. The product side and the technology side, which can sort of achieve organizations on the ESG goals.
Chris, how do fintechs know that they are doing enough? I mean, these products, these solutions, how do they know that they are, like staying on the straight and narrow when innovating and getting to the right objectives without causing further damage?
Yeah, I think you're opening a good question. I think there's again, ESG is so broad that there's some areas I think where fintech has done really well, which is especially on the social side to provide unbanked banking solutions in many markets. We heard it in one of the opening remarks that there's still a large opportunity to actually get basic financial means to a large population in the MENA region. We see that also for certain niche segments as well, and that can be all the way to SMEs or entrepreneurs or certain segments like females and other opportunities where fintech has gone a long way, and these solutions actually are very, very successful and do a lot of positive, I would say, access to financing and so on. The same on ESG, obviously, on health tech and being able to finance or save for your health requirements, for your, I think we've seen a lot of positive things. I think the pressing topic is obviously around climate change and around carbon, and this is where you have kind of two sides of the coin, as mentioned. How do you integrate it properly? How do you not use it just to raise funding, or greenwashing is becoming a big issue. And again, I think the main or the most important thing is capacity building and education, because it's quite complex. And one really great initiative the MENA FinTech Association put together is this Sustainable FinTech Alliance. I think it's one of the first of these initiatives globally. And the first thing we've done as an association altogether was to educate founders and do training for founders. And the next steps are really creating tools to help them. Because data is an issue and an opportunity, but the important thing is that everybody's doing ESG, but do we have clarity on where we are today and where we want to go to? And how do we change the way our businesses operate that they can become carbon neutral? And that's where innovation comes into play, from measuring that, setting the right target, but also being able to finance it, so sustainable finance, unlocking financing for it, but also making sure that companies focus on reducing their carbon footprint, and we actually finance the innovation that makes it possible, because a lot of areas like real estate and other sectors, the technologies don't exist at the cost they have to be at to actually transform businesses properly. So lots to do. I think financing and fintechs are at the core of this transformation, and not just integrating measuring, but also making financing available for such innovations and channeling that innovation to those companies.
We talked about reporting earlier. Are there self-assessment tools available for the smaller companies, maybe for the bigger banks as well, to?
Yeah, one of them I mentioned before is obviously the one from the Dubai Sustainable Finance Working Group. So it's free to download. It's a first step just to learn what are the components of ESG and how to integrate it. You assess yourself. It's free. It's there's no risk. You don't have to report it to anybody. So that's a good starting point, especially for the smaller companies, for example.
Shargiil, if there is no requirement on banks to report on ESG, as we know, but they are voluntarily doing that, who is actually mediating? Who is anyone mediating, and who's assessing whether that reporting is up to scratch?
I think it's important to highlight that there's no clear regulation at this point, but there are multiple guidelines, right? So you will have stock exchanges coming with recommendations that you should be reporting on the following key parameters. So there are guidelines, and there are also industry-focused frameworks, which are extremely important. So if we really need to accelerate, we need to have these industry-focused frameworks. So as an example, the financial industry has created a framework to say that until we have some regulation, this is what we're going to follow. You've seen similarly for the shipping industry, you've seen something similar for the aviation industry, and so on.
How much scrutiny are you under from shareholders?
From the shareholders'
how much how heavy are they at the AGMs, for example?
So I think from a shareholder's perspective, it's extremely important to remember that so ESG and the capital allocation, reallocation that is happening right now is probably the biggest capital reallocation we're going to see in this generation, right? So we need to move to products that are more sustainable and ESG friendly. If you're not part of this journey, you're going to stand outside, right? You're going to end up with stranded assets. Potentially, you can end up being a Blockbuster, a Kodak, or somebody else who didn't transform into the future. So if you're having a product that is very, very unsustainable, is not very ESG friendly, you need to ask yourself that question as shareholder, as a board of directors, to say, is this company gonna be viable in the future?
Yep.
And that's why I think that the fintech and climate tech has such an important role to play, because as they're being set up now and has been set up recently, they can embed this part of their business model, part of their service model, and do not need to be a company that has existed in 50, 70, 100 years and have a legacy foundation who takes a lot of time to adjust to these things.
Yep.
So I think the shareholders need to look at it as an opportunity. Do you still need to have sustainable business in the future? You need to adapt now. Otherwise, you're going to face a lot of challenges in the future.
We need rulers, we need measuring rods. Bryan, is there room for indexing?
There's a huge room for indexing, and I think, you know, a lot of times we focus so much attention in the ESG area on risks, but there's massive opportunity in this space as well, and particularly in the fintech and innovation field, that as we get data more and more standardized and more public, then fintechs have a great opportunity, I think, to take that data, analyze that data, and project into the market for investors, for future employees, for the public sector, of who is actually doing the best job of moving the needle forward. And again, from physical risk, as we see every day, but the transformational risk is really where we need to focus. And the one message I would probably have is there's no on and off switch with ESG. There's transformation. So even, you know, in some ways, helping a brown company become more green should be part of an ESG discussion. You can't turn off a switch for carbon. You have to allow a transition period for carbon to become less brown and more toward green. And I think that's where innovation, that's where opportunity really exists, is in that transformation space.
So
Cyba, if you allow me, I
go
would
ahead, Chris.
add one thing. I fully agree with Bryan, but we have to be faster because some things time is running out, and this is where innovation comes into play. There's no way without financing these innovations that can actually fully transform companies to adopt those practices and get carbon neutral to achieve these ambitious targets that we all have. So I think we need to embrace everybody, but we need to finance the innovations that will actually make it financially viable. And I think Tesla and electric cars was a very good example. The moment it became to the right price point, adoption and investments into that sector skyrocketed. And so we need to do that more, and I think this is where fintech and the finance industry plays an enormous role.
So the title of the session asked whether ESG is coming, whether banks are ready, whether financial services sector is ready. What I would like to ask is, it's such a big proposition, the ESG, environment, social, and governance, and there's so many things within it. Is financial services ready for all of that? More often than not, when we talk about ESG with a context of financial services, we end up talking about the E part. So will ESG disintegrate at least for this sector? Will we be looking at the E? Will we be looking at sustainability instead of ESG? Does it make sense or not? And this is an open question for everybody.
Can I answer?
Please go ahead.
See, on the E part, I was reading a statistics, only 17% of the enterprises report their carbon emission, the registered companies. When we club it together, there is a lot of transformation which has to happen. Transformation at the edge, because you need to have the data, and you need to have the real data, because there is a lot of greenwashing which is happening right now.
Right.
And that the data authenticity, something which is checking the relevance of that data. So I believe that in case if it is segregating, it may make sense, but there has to be a way. One needs to find a way. Like, for example, European Union is creating a single access platform for their investors, which obviously has the ESG data also cloud. They've integrated it as a part of the platform. So they are doing it that way. So maybe regions, countries may have to find a way to take the first step.
Shargiil, is it too heavy to have to deal with all three aspects?
No, I think there's two things. E is where we see a lot of business opportunities. It's going to be extremely important. S is going to be the difficult part to implement. Because as Bryan said, there's a lot of national differences as well. And soft things are always more difficult to implement. But we do have the regulation, so I think that the business opportunities lies with the E, which we need to focus on. The S part is going to be the difficult part because there are a lot of differences. And the G part, just to say, that's the foundation if you need to have a successful organization. So that's how I will put those three things.
Bryan?
So I would also agree that it's very difficult, particularly in an indexing sense, to look at ESG together, that you really do have to focus on E, S, and G. I think financial institutions are ready. Some are more willing than others, as you could ascribe to every single country. And then the one thing that I would pose just as a wide question for everybody, borrowing from our previous panel, what does AI do to the S component? Will be interesting to watch in the overall sense of fairness.
So Chris, over to you. What's AI doing?
Yeah, my last thought, definitely AI will create a lot of opportunity, but also a lot of challenges in this concept. But I would say, I think we need to prioritize. So I think the concept of impact materiality and understanding out of this broad spectrum of ESG, where can I have the biggest impact and what are my stakeholders actually caring most about, and then focusing on those few areas and doing that really well, that is really the most important in the concept from my point of view.
Okay. Thank you all very much. Thank you for your insights and for sharing them with us. And thank you everyone for attending. It's been a very interesting conversation, and I hope that we will, move forward with this, because it is, doing well and doing good while doing well is what we should all be focusing on every day. Thank you.
Thank you.
Thank you.